Welcome to Trader Tip Tuesday. My name is Chuck Whitman, and I build great traders that lead great lives. Traders I've trained have generated in excess of $1 billion in trading revenue and are found in some of the largest proprietary trading firms and hedge funds in the United States. Do trend lines really work? Let's talk about this. The answer is maybe. In the market, all we do is trade our beliefs about the market. All of us have different beliefs, and this is why we trade with each other. So whatever indicators we use, whether it's trend lines or different indicators, all they really do is help us have a map of how we see our beliefs. And so when we look at a trend lines can be useful, especially for somebody who's highly visual, because it can help their brain organize what they see. And that in itself could be helpful. Now, the reality is there is no magic in any trend line. The ability of that trend line to hold is going to be fully predicated on, do buyers show up at that level? When we trade to that level, say it's an uptrend, if the selling stops and or buying emerges, the trend line will hold. And if it doesn't, it won't. It's that simple. One of the things that we talk about is that for the average trader, the only leading indicator that they have that they can lean on is volume. There's two leading indicators in trading. The first is flow. Some traders have access to flow, particularly if you trade at a prop firm or you trade at a bank. Those firms for sure, they have access to order flow. They spend millions, if not billions of dollars for it. The average trader does not necessarily have access to that unless they trade one single market. If they trade one single market, there are tools you can have that you can see the order flow. But beyond that, it's very hard to mentally organize it. It's too much. But the average trader always has volume available to them, and volume tells a story. It tells a very important story. So if volume shows up, the level will be good. And if volume does not show up, the level will not be good. It's really that simple. So when we look at a trend line, if the market retraces to a trend line and buying shows up, the level will hold. If buying does not show up, the level will fail. You might even see situations where the market trades down to a trend line. It looks like it holds as it lifts off, but there's no volume behind it. So it may rally for a couple of days and then bam, it falls apart and takes out the trend line. So I'm going to show you some charts so we can look at this visually. So I have my own in-house proprietary technical platform that we call Einstein, and we use it for a bunch of different tools. This is just a candlestick chart of S&P E-mini futures, daily bars. A lot of times when people draw trend lines, what they're really doing is they're connecting two past data points, and then they're making an assumption that future moves will hold to the trajectory of those two data points. Now, the selection of those data points is highly arbitrary. If I took 10 people and I sat them all down and I had them all draw a trend line, you'd be surprised. I literally might get 7 or 8 different trend lines out of 10 people. Maybe 1 or 2 have the same trend line, but most of them will choose different points. If we're choosing different points, then how do we know that's valid? Now, that doesn't mean it's not useful. Remember, I said we trade our beliefs. And anytime we're looking at what we're doing, we want to ask ourselves a simple question. Is it useful or not? If it's useful, we want to do more of it. We want to use more of it. And if it's not, we want to stop using it. So let's look at this chart. We have a tool built out in here, and other analytics platforms like TradingView and TradeStation, they have something similar. But we're going to do what we call swing analysis. So I'm going to go to analysis and I'm going to choose swing. And here I'm just going to run a basic analysis. And what it's doing is it's running a test. It's going through and it's looking bar by bar at highs and lows. And essentially every time it comes to a new bar, let's just say it's looking at highs. Every time it comes to a new bar, it looks at the high and then it looks to the left, and it's actually going to look to the right. It's going to take a couple bars to know for sure, but it's also going to look to the right as the bars are forming. And if the bars to the left and the bars to the right have lower highs, it's going to say that's a swing. So see what I mean? It's already lagging in that regard. We don't know that we have a swing high or swing low until after the fact. And then how soon it shows up depends on our settings. So we might set it up with one bar on either side. So if the bar before has a lower high and the bar before after has a lower high, well, it's going to be a swing high. Well, we're going to get a lot of those. Or we might say it's 2 bars, we'll get less. We might say it's 5 bars, we'll get even less. So if we look here, you'll see like here's a high. And if we look to the left, it has 1, 2, 3 bars in a row with lower highs. And if we look to the right, it has 1, 2, 2 bars with lower highs. And a third bar is a higher high, but a lower low. So it says, okay, here's a swing high. Then now it starts tracking for a swing low. Here we look to the left, it's got 1, 2, 3, 4, 5, 6, 7 in a row that has lower highs, lower lows. And it looks to the right, it's got 1, 2, 3 higher highs, higher lows, and then a fourth higher high, fifth higher high, sixth higher high. Okay, so it's marking this as a swing low, right? And it does the same thing. Well, here's another swing low. So if I want to draw trend lines, this is a good way to do it, is I identify these swing highs and swing lows. And then when I do that, I can come in here and I can mark this swing low and I can mark this swing low. And there's my trend line. So now I'm looking at this saying, okay, here's a trend. Am I going to be able to trade it or not? Well, look what happens here. There's a correction, does not get to the trend line. And then here we finally trade down to the trend line. And look at, we even get a little bit of a pattern here at the trend line. Yay, let's go long at the trend line. No, gets blown out. Here's why I think trend lines are useful. They're useful just as a frame of what the market should be doing. So if I'm bullish and I've drawn this trend line, the market should be trading above this trend line. If it starts to break this trend line, what I know is the momentum of the market has changed. I know essentially the market environment is shifting. If I'm breaking the trend line, I'm starting to move likely into some type of congestive behavior. And sure enough, look what happens. We break this trend line and down we go. Now let's look at another one. This trend line was off the April low. Okay, then we broke it in July and we had the big break. We had the big break down to August, and August put in a significant low. And it was picked up by the swing low indicator. We can see that, and that probably kicked in over in here. So here's our swing low. Now we get another swing low. So we're going to draw another trend line. Remember what I said, it's a hindsight thing. So we look and say, oh, the market did a great job respecting this trend line. No, we didn't know this till after the fact. Same with this one over here. So the key is can the market hold above it? You can see it corrects, doesn't get to it, corrects to the trend line. And look at this. Oh, it's holding a trend line. Nope. Bang. Breaks it. Well, this tells us that something has shifted in the market. So we get this break, and then, people get frustrated because they see this move, right? So it breaks the trend line and bam, it trades up above it. Well, there is a catalyst. So I'm a huge technician. I love technical analysis. It is such an incredible tool, but I'm also very aware of what it's designed to do and what its flaws are. So in a case like this, the market will trade technically correct 80, 90% of the time, even 95% of the time, which for us as technicians is awesome. But we also have to understand there's certain things that take the technical framework and temporarily make it irrelevant. And that's what happened here. We broke the trend line, and then boom, we had an election. In the election with this catalyst, it changed the whole price behavior. So off we're running again. It doesn't give a shit about the trend line. It doesn't know anything about it. It just knows that Donald Trump won and they like his policies. That's it. The market takes off. Remember, the big participants in the market, they don't know your trend line and they don't give a shit. Again, it's useful as a mental frame to organize the market of how to think about it, but there is no magical trend line. One last thing I'll say about this, and I'm going to move on. I had one of my mentors I learned from in technical analysis, somebody I was incredibly grateful for. He was really big on drawing these trend lines, and he had these gigantic charts that he meticulously kept up. He literally had an office where he had charts on every wall, and these charts were 3, 4, 5 feet tall, and they went the length of the wall, 20, 30 feet. And he literally had not only a yardstick, but he had like a super yardstick. It was like a 6-foot stick that he would draw all of the bars. He would draw them by hand on the chart. And then he'd put up this giant yardstick and he would use it to draw the trend line. And he would extend it out in time. And then the market would trade and it would start to come back to this trend line. He'd say, Charlie, look at this trend line. Go back and look at it. It goes back 6 years. This is going to be a magic level. I tell you, my friend, this is going to hold. And I'm looking at it, I'm like, this doesn't make any sense. Because if your ruler, your yardstick is 1 degree off, and you've drawn this now for 15, 20 feet, it could be your level could be way off. And yet you're making significant trading decisions based off of this. We got to be careful. We can do so much better. So if we use it as a mental frame, awesome. Anything beyond that, we got to be really careful. One last thing I'll say about this, and we're going to wrap today. Flow and volume are 2 leading indicators. So what we're going to do, we're going to bring up, here's volume for all the candles. Now, in the stock market, we almost always are going to have stronger volume on breaks than on rallies. See, on this break, volume's higher. On this break, volume's definitely higher. Every time the market breaks, volume's higher. That's normal. That's okay. But what we do want to see is 2 things. What is the characteristics of the up volume when the market's going up? Whenever we see really good moves, we see them kicked off oftentimes by these above average volume moves, above average volume days coming off the lows. See here and here, and then look at here, right? This one is super strong day. This was May 31st, super strong volume day that kicks off the move up. What you'll see is late stages. We went back to early in the year. When we kicked off the year, go back. When we put our lows in October, we had some okay volume here, but then we started really strong volumes coming through early in the year. And you can see above average volume, above average volume, above average volume, above average volume. This is driving the move. But then what I want you to notice is that when we got later in here, you start to see the volume starts to fall off some. And that's when the market goes in what I call the drifting phenomenon, where it goes a little bit higher every day, but the volumes are falling. Now, then we have this big break. Now, as we said, this is the flip side. We're always going to have higher volume on breaks. But when we get really, really high volume like this tends to be what we call capitulation volume. And this is where people are puking. And typically after they puke, it puts in a bottom. So here we had this super high volume and then it was done. This told us that people were puking. They were selling out and then they were finished. This bottom did not put in great volume off the lows on the upside, but it did have puking volume on the lows. Then we get another break, and this one, look at this. This is on September 11th. We get a really strong volume day coming off the SEP low, and off we go. Okay, then we had the correction where we broke the trend line we talked about here, and then we have a super strong volume day here. Well, that was the election. And that kicked off another move. And then one of the things you can see is since the election, really good volume flows until just recently. I hope this helps you think about trend lines. If you want to use them to help have a frame of how to identify whether the market's doing what it should or not, go for it. If you're intending to use them as the magical level, you're going to be in for a lot of disappointment. Make sure you always use volume in your levels and make sure you use trend lines in the right way. So what day is it? That's right, it's Tuesday. And it's not just any Tuesday, it's Trader Tip Tuesday. On Trader Tip Tuesday, I come to you with tips like today of how to understand trend lines to help take your performance to an elite level. I will see you next Tuesday.